Hello LinkedIn, it's Jeannie with Argy, a certified financial planner and senior 401k advisor, and I'm here to talk about absolutely the thing I'm the most passionate about, and that is the Roth 401k. So I thought I would share with you the top 4 kind of pushbacks that I typically get and my responses to them. The first one is the number one that I always hear, and it's, but I'll be in a lower tax bracket in retirement. So I want to walk you through the formula, because the formula for taxes that you pay is based on your taxable base and the tax rate. So when we get this pushback, people are always talking about the tax rate, and I say, wait a minute, there's the formula. Don't forget about the taxable base. So using the rule of 72 and saving $100 at a 7% annualized interest rate, we know that that account or that money should become $800 after 21 years. So what you're telling me is you're so focused on your potential tax rate in the future that you are willing to take a deduction on $100 in order to pay taxes on $800 21 years from now. Think about how much your tax rate would have to increase to make up for the $700 of tax-free growth that you are essentially giving away. Second argument I get, I make too much money for the Roth. Wrong. You may make too much money to contribute to a Roth IRA, which does have an income limitation, but the Roth 401k does not have an income limitation. Let me repeat that. The Roth 401k does not have an income limitation. 2/3 of all 401ks actually offer a Roth now. If your company doesn't offer the Roth, then call me. We need to get it added onto the plan. Third thing, I'm too old and I make too much money to do the Roth. Listen, I'm a certified financial planner. I build elaborate financial plans for clients all the time that are high net worth earners that are older. And what we do is we project out future cash flows, which includes income. If you're in a situation where you've been saving your entire life tax deferred, you'll have Social Security, which could potentially be taxable. You might have a pension, which is probably taxable. You may be underestimating what your taxable income will actually be in retirement. The other thing, a lot of my clients that are high net worth, high income individuals don't actually need or intend to take distributions from all of their retirement. Now, a traditional IRA has a required minimum distribution that starts at the age of 70 and a half, but the Roth IRA does not. So if you roll your Roth 401k to a Roth IRA, you may be actually protecting a portion of your retirement benefits package from the RMD. Secondly, I have people say all the time, well, some of this will probably go to the next generation. If we have savings in the Roth IRA, we could potentially be extending that tax-free growth into another generation. So we always talk about diversifying our investments. For a lot of people, I'm having a conversation about diversifying how our retirement accounts are taxed, not only today, but in the future. The next argument that I get is, well, what if the government changes the rules? Fair. You have me there. Unfortunately, the federal government does not check with 401k lady before they make changes, and I can't guarantee that these changes that the Roth won't go away. However, they have established a precedent for grandfathering in accounts. So for me, I would imagine if they change this rule, they're going to grandfather in any existing Roth IRAs, but maybe change it for future. I can't promise. That's just kind of my thought. And I will leave you with one more kind of passionate point. If you look at the history of federal income tax rates in America over the last 100 years, we're actually in a relatively low tax rate environment, especially for your high income earners. I'll throw a chart up at the end of this video so that you can see the visual, but if we had to project potentially where tax rates would go, one would assume, based on reversion to the mean, that they would actually be increasing a little bit over time. So that's my take. That's kind of the advice or the recommendations that I give to people. As always, you are definitely going to want to consult with your own certified financial planner or your own CPA. And remember that any illustrations that I gave in this video are just that, illustrations, not meant to be specific to your situation. So that's it. My passionate review of the Roth. I hope you all have a great day, and I'll see you soon.